Right, let's switch now our attention to China,
Yes.
because we know that that's a sort of a walled garden, and we're going to go with the biggest, which is Alibaba. It has a market cap of $404 billion. Remember, these Chinese companies have those Cayman Island structures, but they are listed in New York, so that's a big company. We'll see in a minute it's done well. Price to earnings ratio says 62, not a dividend payer. Let's go straight to the share chart, in fact. So it was quite quiet after listing in the later part of 2015, and no one really kind of got very excited, but suddenly in 2017 gone higher.
Yeah, I mean, interestingly, when I looked at Alibaba this morning, the similarities to Amazon are actually striking. And if you look at where they expect to get their revenue growth from, again, cloud services, they expect to get a lot of extra revenue from. Improving on that fulfillment. They've been investing a lot. They're expecting margin to come through there. And Alibaba is so dominant in China. 95% of all online retail profits are made by this company.
And they do that kind of consumer to consumer, business to consumer, business to business, e-commerce very well. So they fulfill for many businesses their whole online delivery system. They provide all sorts of financial services around it as well. Very broad business.
Yeah, absolutely, and very similar to Amazon in that in that regard.
Jack Ma, the CEO, also very brilliant man, and just obviously very driven. He's not in an executive capacity anymore, but really is the company founder and the originator. And here's the thing, people forget this. China has got like 1.3 billion people.
Exactly.
That means that market is so attractive long term because it's so much bigger than the US, which is only 300 million people.
And the US has 14% of retail sales online. China only has 8%, so there's still a lot of potential here. And in absolute terms, the potential is way bigger than in the US. Again, in China, I think we'll probably see a lot of growth out of the rural areas as well, similar to what we've seen in South Africa, because in rural areas you don't have the big shopping malls, you don't have the convenience factor, and then in urban, again, people are working, people don't have time, so it kind of plays into the same space it does in South Africa.
And in China, like in many developing countries, they've leapfrogged, you know, all the sort of waiting for your fixed line to get installed and gone straight into mobile smartphones and straight into ordering things online, sending money around online, saving using these Ant Financial, which is part of Alibaba, and then transferring little financial gifts to each other. Singles Day. I mean, Singles Day is an incredible thing where in the Chinese market they invented the idea of you buying yourself something. It's become a massive phenomenon, and there are an incredible number of billions of dollars worth of revenues derived from that one day of purchases alone. Yeah,
I mean, absolutely. We'll speak about JD.com in a minute and how Tencent influenced Singles Day at the time. I mean, Tencent, we know, is our Naspers, the Naspers subsidiary or investment, even though we promised we weren't going to speak about Naspers. JD is indirectly also
proportionally
owned by Naspers? No,
what
that's
do you mean
not the
by
right
proportionally?
Word. They are partly owned by Naspers indirectly because Tencent has a stake in JD Group and Naspers has a stake in...
Well, that's the longer explanation, which is also correct.
Yeah, absolutely. But anyway, Singles Day is a huge thing. I mean, most of it's just a huge day for online sales generally, but every day is a huge day for online sales in China, it seems.
Okay, so this one has done very well recently. I actually own some of these. I bought like $10,000 worth in another account, not the Hot Stocks portfolio, on listing. They didn't do much. Now they've basically almost doubled. So can one still buy them at current levels?
Yeah, I mean, if we're saying that PEs aren't really important when you look at this type of stock, but still, if you look at the Alibaba forward PE relative to the rest of the stocks that we are looking at today, it actually looks quite attractive because the earnings visibility is quite solid in Alibaba. Revenue visibility is quite solid, so it's a nice entry into that space and not too expensive, it seems.
Excellent.